We now have had another week of turmoil, continued turmoil in the banking sector. What are you looking for going forward from our policy leaders in Washington?
I think policy leaders need to be clear and decisive that depositors are not going to lose their money in large banks, in medium-sized banks, or in small banks. They can do that within their existing authorities simply by being clear that in the event of failures, given the highly fevered environment with respect to contagion right now, they are prepared to use systemic risk exemptions to allow the FDIC to pay off depositors with assurance that those funds will come from the banking industry. I think by doing that, they can contain a significant amount of the pressures that we're facing to provide confidence. I think they also need to increase the confidence they are providing in regulation. While it is true that the 2018 Trump-era legal changes were passed by the Congress, were in almost every respect ill-advised, and in important respects were driven by special interest pressure. It is also, I think, clear that they are not the reason why we have had the problems we have had. The problems we have had reflect problems of management at a number of financial institutions and reflect major failures of the supervisory and regulatory paradigm as implemented by the Federal Reserve. In particular, the failure to do a stress test in 2022 when interest rates were clearly on the upwards path, the failure to do any kind of stress test about interest rate increases manifests a misunderstanding of what a major source of risk in the system was. And they need to signal an awareness of duration risk. They need to signal an awareness of solvency as well as liquidity issues in the regulatory paradigm going forward.
Larry, we heard, of course, from the Federal Reserve, and particularly Jay Powell in a news conference this week, in which they did raise the rates again, 25 basis points. We're a little more vague on where they go from here. At the same time, the chair said that this was an outlier. Silicon Valley Bank was an outlier. I guess my question to you is, how confident are we actually that the Fed has their arms around the problem now? Now we know there is the problem with interest rate risk when it comes to SVB. How confident are we that we know that there aren't other SVBs out there?
I think it's pretty clear, looking at a variety of ratios, that SVB and perhaps a couple of other banks were in important respects outliers. But extreme examples tend often in life to point up paradigmatic issues. And as I've been pointing out, a world of high interest rates with digital banking, click of a finger ability both to move accounts out and to open new accounts is going to be a different kind of world in terms of risk, and it's going to be a different kind of world in terms of what banks can rely on in terms of the stickiness of deposits. And to what extent that's true is something we're likely to learn in the next year or two. That's why I think it's appropriate ahead of the curve to be sending clear signals of assurance with respect to bank deposits, because it is better to err on the side of overdoing it when you're talking about protecting against bank runs than it is to err on the side of doing it.
There are profound issues raised about the banking supervision here in the United States, particularly with the stress test. There are also questions being raised over in Europe right now. They had the approach of those AT1 bonds or COCOs that did not hold up so well for Credit Suisse, certainly. And now, as the week has progressed here, we've seen Deutsche Bank come under siege. What questions are being raised about the European approach to protecting the banks?
I think it's important to recognize that, as Christine Lagarde said, there are very important differences both between the way the terms of the Swiss banks are written, AT1s are written, and the way the terms are written in other parts of Europe. And also to recognize that the ECB made clear that they're operating in a different paradigm than the Swiss authorities were. But I think it's also clear that there's going to need to be some fairly systematic rethinking of these contingent capital instruments and how they work and on what occasions they are going to be bailed in and on what occasions they're not. Despite many years of legal discussion, it's clear that there were not sharp and shared understandings in the marketplace. I suspect and hope that the European authorities, with the support of the United States and Secretary Yellen and Chair Powell, will send strong signals of support over the weekend for the European banking system, because given the scale of European institutions, there are potentially global consequences if problems spread from them.
Larry, we have been understandably really focused on the banking situation, whether in the United States or in Europe. But in the meantime, the war in Ukraine proceeds. You had an op-ed piece in the Washington Post specifically on Russian assets. Take us through what you think would be a good step forward on the economic front as opposed to the military front in Ukraine.
I've been working with former World Bank President Robert Zoellick on this, and with noted policy academic Philip Zelikow, who's a real legal expert. We are going to have to put billions of dollars, probably ultimately over $100 billion, into Ukraine to win the war and then to win the peace. And the question is how that's going to be financed. And we believe there is both precedent, moral right, and appropriateness to the financing coming from the Russian reserve assets that we have frozen. And right now, those assets are frozen, but there is not yet a willingness to deploy them to finance the ongoing support for the economy and the ongoing compensation for damage that Russia has caused to the Ukrainian economy. And we believe that there needs to be appropriate and creative lawyering, along with strong political leadership to get past that and to be able to deploy those Russian reserves for that purpose. At a time when we are declaring that President Putin is a war criminal, it seems to me almost inconceivable that we should be stopping short of using what are the currently immobilized assets of his state to deal with the damage that he and the Russians are causing.